The stock market rallied all last week and closed on a very high note on this past Friday. So much so that my investments that had turned red actually flipped back to green and started to move to the upside. And there's a lot of people that have jumped in and joined the Invest and Chill community along the way, because I see so many people leaving comments talking about they just started investing. There's a lot of people that are still sitting on the sidelines. And the question that I have for you is, what are you afraid of? What are you waiting on? There's no perfect time to start investing. And I get it, because when I very first started investing in the stock market, outside of a 401k, we're talking about a brokerage account now, I was fearful. I didn't know what I was doing. I thought I was going to lose money. It's much safer and easier to put your money in a savings account or a CD. CDs were big whenever I was younger. A lot of people were putting their money in there and they were trying to drive people away from the stock market. But once I really started to learn how to invest, I'm not talking about day trading. I'm talking about investing in index funds and ETFs in solid companies that have solid balance sheets. Things really started to change. So guys, in today's video, I just wanted to go over a couple of reasons of why people are afraid to invest and what starts to happen once they actually do start to invest. So the very first thing, and I just mentioned this, is that there's the fear of not knowing what to do, right? There's so much that goes on in the stock market, and we feel like we have to learn everything. We need to know where to invest, what brokerage account to use. How do we actually put money into that account? Because a lot of this stuff that you hear people talking about, like on CNBC or on finance articles that you may read online, is they start to use these big words, and it gets us to a point to where it intimidates us a little bit. We're starting to think, I'll never understand what EBITDA means. I'll never understand why this interest rate impacts the manufacturing facility at this plant that's located in Asia. So that's one reason where a lot of people just fail to actually get their money into the market and start to build out their financial future, because they're unaware of how to invest. And that's why I started my small portfolio builder challenge, where I go in and I invest in index funds in a portfolio that I'm building out right here on this channel in front of you guys, and teaching you guys along the way how to invest. The next reason that prevents people from not really investing in the stock market is they may have got over their fear. They may have gotten over the fear of the unknown, or the fear that they're going to lose everything. And they jumped into the market. They started investing. They got this tip from somebody that they know of this company that couldn't miss. You get on the ground floor and ride the wave all the way up, and they're going to make a quick dollar by doing it. They invest in this position. They hold on to it for a while, and then all of a sudden that position tanks. See, if you're going to be investing in the market, especially in individual stocks, you have to understand what that company is about. When I first started investing in individual stocks, I liked investing in companies for products that I used. If I wore Jordans, I would invest in Nike. If I wore Under Armour, I would invest in Under Armour, or I would at least start to learn about how that company operates and what their profitability looks like, what their debt look like. So those are the things that I started to do. Everyday products that I was using or my family was using, those are the companies that I would research. I started to understand how to read a balance sheet. That's how I was able to start understanding what makes a company valuable. Now, one of the things that I always suggest, even if you're a seasoned investor, is that index funds and ETFs are a low stress way to actually invest your money and kind of just let it ride, right? That's where we came up with the Invest and Chill, because we're just investing in index funds. We have the opportunity to own hundreds of stocks, and we don't have to be an individual stock picker. Now, the next reason that I believe that a lot of people never actually get started with investing in the market is because we live in a what have you done for me lately society. And what that means is we want to put money in an investment, and within 7 to 10 days, we expect our money to double or even triple. As I've had coaching calls with people, with clients, and it's not uncommon for them to say, within 30 or 60 days, I want to take this $1,000, and how can I make that $5,000 and then flip that into something else? That's another reason why a lot of people never actually get into long-term investing, because they want to be able to make money extremely fast. They get into the market, they have a bad experience, and then they never come back to the market at all. You don't have to have a lot of money to get started with investing in the stock market, right? You need a little bit of money, and you need consistency, and you need patience. I often tell people, put your budget in place, put the amount every single month that you're going to be investing into the stock market, and put it as a line item like it's a bill. You pay your water bill, you pay your cell phone bill, you pay your insurance, you pay your rent. On your budget, you need to have investing. That needs to be a line item in your budget, non-negotiable, every single month that you're investing in. The next reason that a lot of people never end up investing, especially for the long term, is they just don't have patience. Building wealth is often a slow process, especially in the beginning when you have little or no money. And it takes a while to actually get that rolling. If you go back and look at some of my daily investment update videos and look at some of the comments that people have left in those videos, you'll start to see where people are talking about they started investing. They've been investing for a year, 9 months. They're starting to see some movement in their portfolios, and they're starting to see some gains. Now, the gains aren't going to be tremendous out of the gate for most people, unless you've got a lot of disposable income to put into the market, but it's a much better process than just leaving your money in the bank. You just need to be patient and understand that it's a long-term play in order to get to where you want to be from a financial perspective. The next reason why I believe that so many people don't get into long-term investing and will never hit their financial goals is because they participate in the victim Olympics. They have a victim mentality. Everything that's happened to them is somebody else's fault. It's not theirs. If you make $50,000 a year, you can't live like someone that makes $150,000 a year. And if you try to do that, you're going to always put yourself behind the 8 ball, which is going to make it extremely difficult for you to actually get ahead. If everything that happens in your life is somebody else's fault and it's never yours, it gives you an excuse to escape accountability. And everybody that I've met that has had this victim mindset or participated in the victim Olympics has never been able to successfully complete any of the goals that they've set for themselves in life. I get it. We all have things that could potentially prohibit us from getting ahead. But more importantly, it's what you do when that obstacle that you identify is right in front of you. How do you get around that? How do you ultimately make it work for you to actually reach your goals? We are over a quarter of the way through 2026, and many of us put a lot of lofty goals in place at the top of the year. But unfortunately, a lot of us are not on track to hit or meet those goals. But I'm here to tell you that it's not too late to restart your goals, especially if it's from a financial, career, education, family perspective. One of those things. It's not too late to actually get those things back on track to meet your goals by the end of the year. All right, so I want to hear from you guys. What do you guys think are some of the reasons why people fail to meet their financial goals?